Fibonacci in general, of course, more mathematical, maybe more precise or less discretionary in a way, which therefore, of course, explains part of the popularity compared to waves. I will show you how to use waves in a way that makes it less discretionary and also more of a confirmation than maybe a precise trading tool. I think it's more valuable as a directional guidance, as an understanding for the market, as a method to dissect and analyze the pair and have an idea what kind of impulse or correction could be next. Fibonacci, though, of course, is a bit more precise for trading purposes. One can trade with waves, don't get me wrong, but it does require often enough a tad more experience, certainly. So, that's the difference between the two. But if you combine them, by the way, they become pretty powerful because the waves help identify what you should fib, and the fibs become therefore a bit more accurate. So they do support each other pretty good. We'll dive into real-life examples in just a second. If you are new in here by any chance, or this is the first time you've joined the webinar with myself, my name is Chris, by the way, and Admiral Markets, let us know in the chat so that I have more idea about who is in here for the first time, and we can give a bit more details. Alrighty. Good. So let's move on. First of all, this PowerPoint, though, before we look at live charts, technical analysis, price. This disclaimer, this webinar is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To find out if it is suitable for you and other information on conditions and details, visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and it may not be suitable for all traders and investors. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here, and you can always ask for the disclaimer besides seeing it here in front of you now at admiralmarketsglobal.com or send an email. All right, so fibs and waves. Basically, we can still use this model. That doesn't change. We can still define the trend. Very useful when fibbing because we don't want to, preferably we not want to fib a piece that goes against, let's say, if the market turns around or goes the other way around against our fib strongly, it could, of course, be a loss. So we want to identify spots where we think we have the highest chance that our Fibonacci tool will provide a bouncing spot indeed into the direction. So if you're trading with the trend, it does give a bit of an edge, definitely. Often enough, any reversals, most of the time, the price basically breaks through any fib we have. Sometimes, yes, there is a bigger reversal, a bigger zigzag, and placing a fib on the very first part of the zigzag for the follow-through does materialize in a profit. But less often, and you have to be more sure and more careful, and yeah, it requires more experience. So that's how we can define the trend, for instance, in helping our trading. Take a look at Admiral Markets' social media. You would get more info if you follow just a sec, folks. It's taking a bit longer than usual, but there it is. All right. My topics, to be honest, is fib and waves. Besides Camarilla, yesterday and Tuesday, we focused on Camarilla and moving averages, and we do that more regularly the last couple of months. I don't know if everyone is a big fan of that, but you know, the thing is that I guess the ones that do it are coming back more often. Because I like to use it. I think it's a good method And if you have any questions, I got yesterday email with questions on Camarilla. Please don't hesitate to send me an email. So you can always do that. Anyhow, the risk calendar is now here. CPI, we have in 2 hours, 11 minutes, and some USD news, a whole bunch of USD news, in fact. So those are the two main events for today. All right. Using kind of a blank chart, or a relatively blank chart. So yesterday, we got the update. I hope everyone is in a party mood. I certainly was very happy with the number of pips to the upside. It turned out to move up. So was very happy about that. It did take an extra day, longer than I expected, but indeed finally the bounce from this support level. One of the things we had on the chart yesterday was this trend line is saying this, already Tuesday in fact, I said it's a bullish structure because of the zigzag potential. And we got it. Bingo. Zigzag, correction, zigzag. Now I expected it a bit earlier. I expected it yesterday from here, but I did say that this was the key level to keep an eye on, that blue support level, which turned to be true. So anyone even took it higher, or yesterday at the best price possible, which was at the orange circle here, right? Yesterday anywhere in here, although it took a few hours, we did get suddenly the boom. I have no idea why, if it was a news event. Oh yeah, it was actually USD retail sales was negative. So that helped, of course, logically. And we got a big boom to the upside, actually breaking through this resistance line with a big spike up. So I took profits somewhere around 128 here, somewhere halfway. Went up a bit, 60 pips more even, but that's okay. So the euro dollar was indeed a big upside, and the euro dollar did move up a bit more than the pound dollar, but the pound did move up a lot too, though. But the euro just a tad more because the euro pound was moving up as well. So did anyone, by any chance, catch a long yesterday? Just out of curiosity. I mean, if you didn't, no problems, but we did talk about it, so I'm just curious. Maybe, and if you did, where did you take it? Was it a candlestick pattern or a break of these trend lines maybe, or the bounce off of this, or maybe Camarilla? Let me know what your trigger was, and if you took a long. I was just curious there. So if you did, please just 1 minute chat, 30-second chat to me, please. So that was the trade yesterday. That helped the equity curve again. And yeah, of course, the news event is something that some people would not take it. I was already in the long a while before the news event and just kept it during the news event. So that is always, of course, an unknown factor. That's definitely true. But Björn did take the buy. Good, great, happy about that, that you got those pips. If we take a look where price stopped, right at, well, not right, but close to the minus 272, a bit above it. And that's how fibs can help, of course, as well. We see a zigzag pattern like this, which in wave perspective could be an ABC, for instance. We see price respect the 61.8 fib, and then go to minus 272 target. This is how you can use fibs. This is actually an example of how a bigger correction is taking place on the euro dollar. And you can use fibs to capitalize on that. But you need to know when, of course, we can use it. If you start fibbing, this part here, obviously, was too early. That was not a reversal. And this was just an upside correction for more downside. And price breaks through the bottom of that fib. So you need to know when to place a fib like that. All right. Now, there's a specific way of fibbing. You can either, or there are a couple of ways of fibbing. You can either fib a natural swing high, swing low, such as, for instance, this zigzag. Or you can use the rule that you only fib from top to bottom and you wait for the minus 618 to hit, and then you take it from retracement to target. In that case, we didn't have a 61.8 fib yesterday, earlier this week, but an 88.6 fib bounce. So that depends if you fib like this or like this. In my opinion, I use both occasionally. depending on the situation. I sometimes use both. Those are two ways of fibbing. Natural swing highs, actually three. Natural swing highs, swing lows, from retracement to target, and using the awesome oscillator. When you have an awesome oscillator that is going from zero line up and then back to zero line, you can fib that piece. Or if you have an awesome oscillator that goes from zero line down and up, you can fib that piece. So what I mean with that, let's take a look at the hourly here. Here we see, for instance, price move up. And the awesome oscillator goes from zero line up and then retraces back to the 0 point. Right? So when we see it retrace, we can put a fib from here to here because we know that this swing is most likely finished. When price is in that swing, we don't know exactly where it will finish. But when we see it getting close or at the zero line, we know that that probably is one swing, and we can put it from top to bottom and say, okay, maybe we'll get a zigzag like that. And indeed, the 50 right up to the minus 618 target. In some cases, fibs can be extremely accurate. Like this example. Okay, let's see, Mohammed. If you have questions, indeed, let me know. If the market is down from 0, then what we should? I'm asking about fib 0 point. And I'm not 100% sure what you mean. I think what you mean is the 0 point here and the 100 point here. Are you talking about those levels, the starting and ending point of a fib? If you basically, I'm not sure about your question as yet, but what I do is always I fib it from left to right. So if there's a bullish move, I take it from left to right. So I'll get 100 at the bottom and 0 at the top. Others might fib it the other way around. They might fib it, in this case, from left to right. Sorry, from right to left. The other way around, of course. Sorry, 1 second. Not to confuse you here, that's another way of fibbing it, by the way. There's a fourth way. I never mention it because I never use it. But this is, some people fib like this. Now I don't like that way. I really dislike it a lot. I know that there are definitely traders out there that do it. It's just definitely not my way of doing it. It feels very unnatural to me, so I never do that. But that is a fourth way, in fact. All right, so those are ways of fibbing. Now let's talk a bit about waves as well and throw it into the mix together to see what could be happening for the current events. What I meant to say is that we can take a look at the waves so that we have an idea what we could expect for today. Now, from a wave point of view, you can see we were in a very strong downtrend, right? You can see here orange wave 3 completed probably recently, and we're going up for orange wave 4. So that's why one of the reasons why I liked to buy yesterday, because I thought at that point yesterday already it could be a wave X, magenta, and we could bounce to the upside to finish that wave 4 orange. Part of the reason, not everything, that I thought that long was good, because it did fit. And the ABC that we saw here, this zigzag, formed a W, and we're now seeing again a zigzag. Now, don't get me wrong, this blue X could easily be here at the magenta X. You know, these kind of differences, to be honest, are not so relevant. I'm more of a, as I've told you before, more of a practical wave analysis, not much of a theoretical one. I think wave analysis should be give a value, practical value, not something that we should debate for hours and hours. I think that has little value regarding our time as well. So, these kind of things I will never bore you with. Don't worry. But you can see that wave 4, there's a decent chance we can get up to wave 4. So we still have some space to the upside. The 38.2 fib, that's basically my message, is 129.60. We've broken out of resistance. We've broken out of this 5-wave, third wave, right? We have a 1, 2, 3, 4, 5. We have finished basically wave 3 of 5, of 5, of 5, of 3 here. So now we can get a big correction like this and then continue down, is what I would expect for the moment, though, at least, unless we break seriously above the 38.2 fib. So bearish in the long term, but still space up to the 38.2 fib on the 4-hour chart. Let's get over to the 1-hour chart, and you can see the wave 4 a bit better with the ABC, 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 as I said yesterday, and indeed the bounce. Now that ABC, I think, is actually just part of a bigger ABC. I expect an ABC here again for the upside. So where could this B end? That is, in my opinion, the question now for that continuation up to C. It could be wrong, and nothing is 100% logically, but I would feel okay with fibbing at this point in time this leg up, and you can see we already had a 50% bounce yesterday. And this could be a correction for more upside like this. Now, how far could that correction last? It could, in fact, do a couple of things. One thing, it could actually bounce here, but it's difficult to say. We got some bearish momentum. It could even go lower to lower fibs. It bounced yesterday off the 50, but it could bounce off the 61.8. So one thing we can do is put a trend line on top of here. Because if price breaks through that trend line, it's a breakout to the upside. The other thing could be to put a pending at the 50 again, or the 61.8 with the stop loss below the swing high, swing low. Swing low in this case. That would be another method. Or even here. But we see some bearish price action. So in that regard, I would be more inclined to wait, because we can see the bearish candlesticks appearing as we speak. So unless we see some big pin bar or engulfing twins maybe, I would still be waiting, right? Now if one would have taken the 50 fib yesterday and the bounce off the trend line, that was a good spot to go long. And price did bounce a decent amount here, about 100 pips, didn't it? 90 pips. Now officially though, that would not be the target. Officially minus 272 target is the target at 129.58, because that's where the bigger daily or 4-hour 38.2 fib is as well. So there's that confluence at that level, and that's the target. So the better price we get, the lower price would go, the more reward we have, the less risk is needed. So patience could pay out. But we have to be realistic as well. I wouldn't expect price to go all the way that deep, for instance, to the 888.6. Waiting for price to get that deep might mean missing the entire trade, which is okay occasionally, but we don't want to do it too many times, otherwise no trade is taken. So any of these fibs, yes, the 61.8, I think could be either a pending order or market order as the price either approaches it or waiting for some kind of extra confirmation, like a hourly wick, 30-minute wick that touches the 61.8 and bounces off that level, some kind of confirmation of a candlestick pattern engulfing a hammer that shows the price indeed stopped at that level, for instance. So those are options. Why do I talk about the break here? Because it's not a trendline webinar, it's a Fib webinar, but I do like using trend lines in combination with Fibs and waves because sometimes the price, in a way, because it either bounces off a shallow Fib, it's maybe too risky to go long at a shallow Fib, and then, or we have a pending order at a deeper Fib, but price misses it. Let's say we have a pending order at the 61.8 Fib, but price bounces off the 50 Fib. Price missed our Fib, but it doesn't mean we have to necessarily miss the entire trade. We could take the break of the trend line as the alternative, or as the add-on, or as the scale-in, even if we do catch the Fib. The trend line break basically gives the idea of a breakout, and because there are 6 Fibs, 6 retracements Fibs, sometimes we're not going to catch the trade, and sometimes we still want to trade it. So a breakout therefore gives an alternative. In that regard, sometimes having a confluence, an extra confluence helps because we have a lot of Fibs to work with. And roughly what I've at least heard from a good trader I know, and I don't know exactly his source where he got these stats. It's difficult, I can imagine, to calculate these particular stats, but basically the chances, obviously, of price going to a deeper Fib are going lower and lower. So the chances, I think, of a 78.6 Fib being hit statistically is about 40%, around 40-ish. I think the 61.8, if I remember correctly, was about 60. 50 is about a 75% chance. Now, once again, I don't know exactly how he calculated it or what his source is, but it's a very good trader. I trust his comments fully. So, but anyhow, it's not that vital. But just to give you an idea, obviously, that the chances, just to give you the principle that the lower we go, the lower the chances. In some cases, certain Fibs seem almost impossible. If you really get a strong trend, most of the time you're not going to see price retrace lower than the 50. Bob, for instance, is saying or asking, is the 78.6 Fib too low given momentum? I would think so, yes. Although it was a bit of a funky break because of the massive wick, I don't think that I still think the momentum is the overriding consideration here. Plus the space to the 38.2 Fib, I would not think that these Fibs are possible indeed. Or maybe better said, very unlikely. Target Fibs sometimes are better because you have more clear level in mind. But you have to be pretty sure about the Fib because sometimes price, if you Fib the wrong leg, the target will not be used. Obviously, the more confluence there is of Fibs, the better. The more likely price will stop there. If we have 2 Fib targets, 2 Fibonacci retracement levels at that same level, there's going to be more chance that price bounces at that level. Now the same thing, the good thing about targets is that they're more specific. There's 1 minus 272 target, there's 1 minus 68T. Usually speaking, price stops at these targets. It's a bit of an advantage because we don't have a lot of levels to work with. Just one. Although, of course, not always these levels get respected, but it is easier. Now, the advantage of, for instance, the 272 target here is that there's a confluence with the 38.2 Fib. Here. So we have a confluence between the target and the 38.2 Fib at 129.58. So I see 2 things that are interesting. I see a long potential somewhere today or tomorrow, somewhere between the 61.8 and current price, That's a bit more of a, an area where one can think of. And I see an interesting short potential from this 129.50-60 level. Because there's a target and a 38.2 fib. The stop loss for the upside is simple. It would be below this bottom. And if price goes below that bottom, then tough luck. We have to accept the loss because that's the invalidation level. The stop loss for the 38.2 fib and the downside could be tighter. It could be above this swing high here, above 131.90. It's a spacious stop loss though. Not many will be a fan of that, but it is above the 50 fib, which means that if price goes up to the 50, you can get out of that trade probably for break even or even hang on. A tighter stop loss would be above these tops right in here. These tops right in here. A stop loss above 130, like 130.13, which would be tight relatively for a daily fib about only about 50-60, but could have, I mean, if you target 121.70, could be about 800 pips target. So, I mean, if it works out, it would well compensate the reward, the risk, because obviously you're looking at a 12-to-1 trade, which is a tremendous risk to reward. If only this trade were to work, in 1 out of 10 cases, you're still making profit. So it's difficult to imagine that it wouldn't work in 1 out of 10. I think it would work more. I don't know how much, but I would say even up to half. But that almost seems optimistic compared to the reward to risk, or reward to risk. Yes. All right. So, well, this is how you can use fibs and waves together. Now, if we go back to the very strict way of fibbing and use the guideline here from target to fib, then we had this fib on. I hope that is cleared in this particular strategy. If it's not, let me know. And we can see that the minus 618 target is 129.20. That is the main target. Until we hit that target, we can't move the fib. In that regard, this fib is still in play, and our chance of taking the trade was from these fibs. That means there's no new trade actually here if we take that particular style, because we're still in this trade from here, waiting for the target to get hit. One of them has been hit, now waiting for the next. Therefore, any longs actually in here using that strategy is riskier. And stop loss should actually be a bit lower. Not this bottom where red is, but this bottom where the orange is. So those are two different ways of fibbing with two different conclusions and targets. But not all too different though. Sometimes there's more difference. So if you have any questions about how to take the strict way of fibbing, right, let me know. We can take a look at more examples though soon. Just in the meantime, what do I think about today's Euro CPI? Will it have influence on the market? I think yes. Yeah, I think that one would be a biggie. It's going to be interesting to see what kind of inflation there is, and if there's any, or is it negative? That could be a big one. So if it's negative, we could see the euro maybe fly down to the fibs that we just mentioned, maybe even as low as the 78.6 fib. Who knows? A news event could do that. And let's see. Next question: if I place 3 buy orders at the 38.2 fib, at the 50, at the 61.8. Is that a good idea? Yes, I think it is. You just have to make sure that the risk in total that you put on all of these 3 positions would not exceed, does not exceed the risk you would take, normally speaking, on any single position. So if your standard risk for any trade is 0.5%, then you have to split that 0.5% somehow over 3 parts. That could be 0.17, that could be 0.17, 0.17, 0.16, for instance. Or let's see, any combination that leads up to 0.5. It could be 0.25 and then 0.125 and 0.125. Or the other way around, 0.1, 0.1, 0.3. It really doesn't matter as long as it's 0.5. I mean, the standard risk. If you use only fibs for trading, then how much chance we have of success in Forex trading? I think that only fibs depends. It could be horrible, it could be good. It could be horrible because if you only use fibs, you might be fibbing it the wrong way, and you could be fibbing it against the trend, and that could be bad. If you use it as a part of as a part of something, it could be better because then you first look at what is the trend, you look at momentum and correction, you look at chart patterns, and then there's a higher chance of using it successfully, I think. That is a bit of a disadvantage if you only use fibs. If you only use fibs, it's probably better to use the very fixed rule of fibbing the very first leg and waiting for the target to get hit. Because by using it that methodically, you're disciplining yourself to treat it the same every single time. And that could be pretty good. Actually, I know traders that are trading like that. Actually, I know parties that are using this particular style and strategy, actually. So yes, that is possible. Personally, though, I have to add that I've never, I know about this strategy and I sometimes apply it, but I use it as a confluence. I had never taken this strict strategy, fib strategy, and applied it day in, day out for 6 months to a year or whatever, or more, and these are the results. That I don't have. As I said, I use fibs as a confluence. Bob says that maybe the CPIs are final numbers and maybe not so important, by the way, just that you know. So that's, I think, all the twists and angles on the euro dollar. We can now move on, maybe to the pound, or what do you like more, the pound or the dollar yen? Which one's next? You can choose. One of the things, by the way, that you can see is also good about the 130 level is that it's also this fractal here, right? The resistance. So that could help the fact that it could be a good stop loss. We have a very big fall. Don't forget the big fall. We are moving up now, but don't forget this momentum. I don't think that momentum is over, to be honest. And I do expect price to stop anywhere where we had, this kind of looks like a supply and demand zone for those that know it. Fall, supply and demand. Fall, supply and demand zone. Fall. So if price gets back to this first one, besides the 38.2 fib and the minus 272 target, there's a daily resistance, daily top, and this supply demand zone right in here. This one. On the 4-hour chart, you see it a bit better. You want to use at the moment, the valid fib on the euro dollar, in my opinion, is not from the very top, but from this top. That has to do this is actually, there's a fifth way of fibbing, is wave fibbing. So there are actually quite a lot. But that's another way. This is actually a wave fib. It's also an oscillator fib, by the way, probably. In this case, they do are in sync with each other, because probably this will go back to the zero line, and this is one swing high, swing low, and that's why I'm putting the fib on here. It's a wave 3 fib. I'm putting the fib on wave 3, and it's a awesome oscillator fib, because here's the bar was at 0, moved away, now it's going back to zero line. If you take it from here, I think this is better than one from here, which is the top here at 137-ish. Let's see. So Justinus, what kind of fib do you use? I don't know what you mean with the first one and the second one. I forgot exactly the sequence. Or do you mean the fib levels or the ways of fibbing? The waves of fibbing, once more to repeat, maybe for the clarity, we can fib a swing highs, a natural swing high, swing low. We can use the awesome oscillator from zero line to zero line. We can use wave analysis. We can fib it, what I call it, the other way around, instead of, from bottom to top instead of from top to bottom. Or we can use a very methodological way of fibbing, and that is from top to bottom or bottom to top, and then wait for the minus 618 target to get hit before moving it and then move it from retracement to target. Did that answer the question by any chance? Just to check with you. Let's see. Edith was first, and just beat you, Bob, there with the Dalian. But we'll take a look at the Dalian after this one. Okay, cool. Pound dollar is it seems to be a bit more understandable in how I view the charts at this point in time. I'll be honest with you. Let's take a look. Now, we had basically, of course, as we know, a very strong uptrend on this pound dollar for about a year. And if we take a look at that, you see we hit the targets here, right? If we put fib from bottom to top, you see shallow fib, hit the target, boom, boom. So we can move it. We can move it. Interesting enough, according to this methodology, we actually didn't break a key bottom still, because that is actually the bottom of this swing high, swing low. It bounced off the 78.6 fib, bounced off the 888.6 fib. So that's an interesting observation, in fact. We can put a blue line there. If we then zoom into the daily, though, we do see that, of course, that uptrend has been broken. And we can quickly start fibbing it to the downside to see what is valid here for that downside, excuse me. Okay, we're in this fib, and we just hit the minus 272 target. So maybe that's why we had a pretty strong bounce there. Basically, at this point in time, from a daily point of view, there's nothing really we can do that much, because the fib, using this methodology, is from these fibs here, is a shorting area from here, waiting for this target, which we just hit, and the next target. And now we're in the middle of the playing field, basically. We're on the way to targets. And that makes it always, using that methodology, it's not, on the daily chart, it's not set up for any trades at the moment. To be very precise, we would need the minus 618 to get hit, and then we can move the fib from green to green. And we have a new playing field to the downside, waiting for price to move up to any of the fibs for more downside there. The downside, however, has been moving very slowly and choppily at this point. If we then put fibs on the 4-hour, you can see that we're still pretty much ingrained in this downtrend, but it's pretty choppily moving down. Of course, we can put fibs on this 4-hour chart as well and do the same process. And let's see what is valid here at this moment. Let's see, we had a week ago, we had a move up to the 78.6 fib here, which almost hit the target. I mean, it was very close, missed it by 10 pips. So here too, we're in the middle of the playing field waiting for price to get to the target. So you see, we're pretty tight, difficult spot with the fib, in regards of fibs at least, to find a trade. We could, of course, even zoom lower to the hourly and see what is going on there. Do the same process. This is how you can go from time frame to time frame. And we see price stopped at 78.6 fib yesterday to the dot, despite the hefty upside. So it looks still more bearish, if anything. We're pretty close to the 50 fib. We're underneath the trend line. We're underneath this trend line as well. And even this trend line still. So the trend seems down. But price is moving quite awkwardly, I thought, yesterday and in general. The pound is very corrective, very choppy. From a fib point of view, it's bearish, and it would still be okay to short. I mean, it's not as great of a price as yesterday when it wicked right into a great discount zone from a fib point of view and then moved down from there. But it's still okay-ish. I probably personally would not take the trade at this point, though, to be honest, because I think that it's the whole situation I don't like too much. I see higher fibs that were trades already in play. I see a big bottom here, pretty close by, and therefore rather not take it. Also, if we then now look at waves, besides using this strict way of fibbing, then I don't see much of a confirmation either. I have this wave count at the moment. I've changed it in this zone. I've never changed the fib count, the wave count, as many times as I've done in a year and the year I've been doing wave analysis for admiral markets. Never, ever. I think in most cases I probably changed it once, maybe once, twice. I think here I changed it 3 times. It really never ever happened because of the difficulty for me in this case because of the choppiness. Was this a wave 4 or did wave 4 still expand like this? Never had so much doubts as this situation. And it still remains, in fact. I really don't give any particular value or extra advantage to the wave. And that sometimes happens. Sometimes I look at a situation and there's a clear advantage, I think. Sometimes I'll look and I say there's a small advantage. Sometimes I'll look and say marginal. And here I would say there's nothing. Because I really don't know if this is a wave 3 or not, or if this is still correction. Nothing. So this is, I still think, the most likely scenario, but it could easily change. And that sometimes happens. I should have some measurement on the side of the wave analysis to give an idea how much likely I think it is. But so that's why the pound, I think, is a bit difficult. But at the moment, the most likely I do think is that wave 4 probably completed here or earlier. That doesn't really matter too much. But we are in a bearish momentum with a wave 1, 2, wave 1, 2, and we could be maybe accelerating for wave 3. If it is a wave 3 of 3, of 5, then when we break through the green support line, we should move down a lot. So maybe the best way at the moment is to let price break, let it bounce back, and then take it for the next ride. Just out of curiosity, we can take a look at Camarilla levels. Knocking on the door of L3. Let's see if it can break there. But the moving averages are bullish, so you can see how strange it is. Up, down, and it's the heartbeat here. Moving averages are bullish, but also flat. So I'm not a big fan of this, to put it simple. The euro dollar is looking more interesting. All right, the dollar yen did something that I didn't expect. I thought price would bounce off the 38.2 fib, and also took a trade at the 38.2 fib and lost that trade. And those things happened and went deeper than normally waves 4 do. So although technically it still could be a wave 4, the chances of that indeed being a wave 4 are smaller now. And I'm more in a careful mode at the moment, to be honest. Price did stop at the 50 roughly. Well, actually it accelerated below it in throughout that day, but that sometimes happens. It closed above it, so could maybe still be considered a 50 fib, or if you use this fib, it was a 61.8 fib. Why this? Because that's the wave count fib at the moment, from here to here, which is a bit different than the awesome oscillator fib. Now there is a difference. The awesome oscillator fib will be using this bottom from to this top, as you can see. So there's a bit of a difference there. A 50 fib according to AO, 61.8 fib according to wave fibs. In any case, it's a deep retracement, and I am cautious. It's at a bouncing spot, but it's certainly made a very hefty downtrend channel here, actually breaking the bottom of the channel for more downside. And it actually had a very fast downside, and this is looking very corrective. So I wouldn't hold my breath for an upside rebound as yet. In fact, if anything, maybe we'll see one more downside here and get a double bottom or something like that. Or even, who knows, break the bottom and continue down. So quickly look at the wave analysis. Still, though, at the moment, still have it as a wave 4, but if we really push below, this is the very, very max. I mean, if we start pushing below 105, then we'll have to change. Then this is incorrect. And this seems the most likely to me, to be honest. But the dollar yen was apparently overextended here, and maybe finished the wave 5, and this time the wave count wasn't accurate. All right, so that can happen, of course. Still have it as wave 3, 4, but it's going to be balancing on a thread. Let me say it this way, if that is indeed going to play out. This is wave 1 hour chart. And you can see a lot, it explains the entire correction down. And didn't expect such a deep down move because we had a deep retracement here. Usually we don't get a deep target if it's a deep retracement. Usually if there's a zigzag, price would retrace shallower and do this. Normally if you get a deep one like that, it doesn't go as far. Either you get a triangle or you get something of a shallower one. But this is, which is not a rule, it's a guideline, so that's why it is not always valid. And it looks like we're in a triangle here. So I'm not a big fan of this, as you probably noticed as well, because of the fact that I'm a bit uncertain now with regard to the long-term direction. Technically, I guess this could still be a good break for double bottom as a target. I didn't buy, by the way, the 50 fib here because when it broke through the 38.2, that was it for the dollar yen, in my opinion. The market really accelerated a lot of dollar weakness in the Canadian. Big movements. It was interesting to see. I loved it on the euro dollar. Luckily, the euro dollar win was more than the dollar yen loss, though. So that's it regarding the majors, and I don't have a wave count on others. These are the three I take care of and keep an eye on. Others, I don't do it actively. Occasionally, I will maybe look at it, but I don't know it by heart, or I don't keep tabs on it. So I could look at it, but it wouldn't be that precise as the other three. We could take a look at fibs, though, on the other pairs. Yesterday, maybe quickly on the euro-yen, by the way, the euro-yen made a pretty, let's see, consolidation. In fact, I'm looking for here 135.50, 135.75. I thought would be that bouncing spot. It did bounce here, but it just went sideways and then followed through down. Then eventually went up. That's because the dollar yen, of course, made that big downside, and the euro dollar eventually did make the upside. So that's what you saw in the euro yen, a bit down, then up. Didn't do much actually. Pound yen, though, looked more bearish. I remember saying that, and that was true. We broke this bear flag formation chart pattern. At roughly 38.2 fib, which is typical for 50, okay, which is the max normally for a bear flag. And that was indeed a good downside trade. Let's see. Euro dollar AO, let's take a look. What time frame would I favor? Good question. Not the 4 hour. It's building. Daily is interesting to, of course, keep an eye on it when it gets to the zero line, but that's still far, I think, still far from the zero line. So that's nothing to worry about for upside. 4 hour is building. 1 hour is moving down. 30 has already moved down. 15 is below zero. So probably at the moment I would have to say that the 15 and 30 have made already a retracement at this point. So in that regard, we can put a fib on the 15 and 30-minute chart. It's completed. The hourly still hasn't, but that could still see and easily get a bump up, still follow through. It looks like these three time frames seem the most relevant, or two, 30 and hourly. The hourly doesn't have to go all the way back to the zero line, though, in this case, because we have strong 15 and 30-minute AOs, and we trace back to the zero line. So I would expect, if we finally get the bounce, that the next break of a fractal would be the confirmation of a follow-through to the upside. The fact, however, that we had an upside here in an AO, strong AO, doesn't mean we have to get upside from right now, right here, though. That could be deeper as well. One of the things that could give a confirmation is a break of the previous resistance fractal. At the moment, the closest resistance fractal is here. This is a strategy I use on the 4-hour chart, but its principle could be interesting for confirmation on other time frames as well. When you have a strong AO, you can wait for AO then go back to the 0 line and then wait for the next fractal break. Therefore, that critical level is 128.20 at the moment. But it could be lower as price moves lower, of course. Once price breaks that, it would be confirmation of the uptrend continuation. Looking at the current momentum, let's take a look at the fibs here. At the current momentum, if from a reversal point of view, the targets of this fib here, if it is a zigzag, would be minus 272 or the minus 618. It would be pretty deep if this reversal fib works out. That would be an enormous discount if it gets here to the minus 618. That would be a great buying zone. Who knows? One of the advantages of it is the fact that we are in a pretty zigzaggy formation here, so we could have the same again. In that regard, it is maybe not impossible. Could even look on the 5-minute, but that's maybe pushing it. We could take a look at the 5 to see where that correction could end, maybe. $127.66 is the minus 618 target. All right, let's take a look. That level is equal to a 50 fib, almost 50 fib, 5 pips away from it. So maybe we'll get again to the, maybe we'll make it all the way down to the 50 fib again. Alrighty, let's see, pound Swissy. Alrighty, let's take a look. Let's see. No problem. Glad to look at it. 152.70. 152.70. What did you do at 152.70? To be honest, I unfortunately forgot exactly what the details were. Okay. Okay. Yeah, it's been unfortunately accelerating. Now I remember. Yeah, I was saying that we could. I think I said yesterday that one of these 7 deeper fibs, no, would be. I don't remember exactly, but I have a feeling I said we could maybe bounce off these deeper fibs, but maybe not. I'm a bit fuzzy now at the moment, unfortunately. But I do remember saying it was an uptrend, that fibs could be bouncing spots, right? Okay. Yeah, we went pretty deep against them, and that sometimes happens. If you get big momentum, it just keeps pushing and pushing, and it stops at those fibs, right? Bounces even a bit off of them. Here not though, but then pushes through them. That can happen. It's unfortunate. Well, yeah, those things happen. There sometimes it's always good to learn from these things, though. Definitely, it's a strong impulse recently as well, which is a bit annoying, and no divergence, which doesn't mean everything, but is not pleasant. Good thing is, though, that I do think there's I mean, sometimes it does happen that it just blasts away like this. There's a good chance, though, that price will use support for a bounce. However, in this case, because there is such a strong momentum to the downside, you might want to contemplate being more aggressive if it does move up like this, in either maybe taking it off or at least trail stopping it below the bottoms. If we do get something like this, for instance, that would be a scenario to try to exit at least for either break even or a smaller loss maybe. Considering the momentum here, it's difficult to expect more. Hopefully it will not continue and break through the bottom. But we don't know. If it does, then it would be quite unusual, not something we typically see, that just breaks and breaks and breaks the bottom like that without any bounce. We have a bit of a bounce, but let me take a look at the 4-hour chart here. Ooh, yikes, this is just falling without stopping. Which is nice for this pair, but I mean it's almost unrealistic to expect that it could do more. I mean, well, I mean it's probable, it's possible, but it's difficult to imagine. But you never know. If we put a fib on this downside here, then any of these fibs could be turning spots. It depends how fast price moves up. If it moves up pretty fast, it could probably make a zigzag. If it starts to go a bit slower, you might want to be actually more careful around the 50 or 38.2 fib. Those levels you mentioned, I see two indeed, 5170 and 5230 are fib levels, like fibbing this way at least. If we fib the swing high, swing low on the oscillator, then it would be this fib. $52.40, $52.30 maybe could be a spot price could go back. Would I be looking for shorts? To be honest, not now at least, because it's too close to this bottom. So I would definitely not look for that. If you were looking for longs indeed, and you didn't take any of the fibs, then maybe a golfing twin like that could have been a signal to take with a stop loss below the bottom, and it's a small risk, but a good bouncing spot. So yeah, it's a difficult situation. Strong momentum down, but uptrend on the higher time frame plus close to bottom. So it's tricky. Let's see, divergence on daily. Divergence on daily. Not sure exactly where you see it. Between these tops, there's convergence. Between these tops, there's slight divergence indeed. There was bad divergence between these bottoms here, like that. That's why we probably got the upside. Between the current bottoms, it's not divergence as yet because this is still above the previous bottom, and the AO too. If the AO would dip lower, though, and the price wouldn't, that would signal actually bullishness. Does every swing high, swing low, is every swing high, swing low suitable for a fib? No, not really. In fact, some of them could be dangerous. I'll tell you when. If you like waves, what you want to avoid, if you have the 5-wave structure like this, basically, what you want to avoid is placing a fib on the 5th wave, because price then often enough retraces like this and goes through the bottom. It's okay to fib wave 1 and wave 3, but fibbing wave 5 is not good. Instead of fibbing wave 5, you would then want to maybe fib the entire 5 wave from start to beginning. That's okay. So fibbing wave 1 and 3, or the entire wave 5 is okay, but not the last part of 5. And you don't want to fib, for instance, if you have an ABC correction, you want to be careful of fibbing wave B, for instance, because the price will go against you. You want to be careful with fibbing against the trend. For instance, if you put a fib like this to the downside here, well, price didn't continue lower, didn't do that. It actually kept on going up. So that would be something you want to be careful of and be more cautious of, because sometimes putting a fib on the reversal, obviously doesn't always lead to more reversal. So that's something you want to be careful of. Most of the time, if the AO is above the 0 line, you want to be careful basically with putting the fib, a bearish fib. If the AO is below the 0 line, you want to be careful basically with putting a fib, a bullish fib, as a rough indication. If I answered your question correctly, let me know. Let's see, Kalian, is it bullish in daily at least? Because it's already bearish in 4 hour. Yeah, 4 hours is a huge momentum. Is actually in a not only momentum, but is actually also in a downtrend already here. But it is at a bouncing spot. The market is always about a few things. One is momentum or correction and subsequent chart patterns. 2 is trend. 3 is support and resistance. Although price could be in a downtrend and a down momentum, downtrend on the 4 hour, down momentum on the daily, there is still that support and resistance that has a high chance of providing a value for a bounce. 1 and 2, unfortunately, are not on our side anymore. But 3 could be strong enough. And patterns, actually, 4 things. Or it depends how you group them. You can look at it as patterns, candlestick chart patterns, trend and just include momentum and trend as one, and then the support and resistance. Unfortunately, what was looking like a bull flag turned into not a bull flag. That sometimes, unfortunately, happens. And the only thing that could help at the moment is really that support and resistance. The trend on the daily, though, because the support and resistance hasn't been broken here, despite the down momentum, the trend is still up, in my opinion. So the daily is a bit of a mix. There's a down momentum, yes. But when we look at this weekly chart too, there is this uptrend. Something like that. However, because of course the strong momentum is in play, it does look scary at this point. I mean, we've never seen such a strong fall since here. We did get a rebound there. We had a strong fall here. That was followed by a zigzag. We had a strong fall here. That was followed by upside. It could be the same. It doesn't have to be. Just difficult to say. We are at a support level. We are in an uptrend on the daily. We're in a down impulse on the daily, though. So once again, uptrend daily, down impulse daily, though, at support. 4 hour is downtrend and down impulse. Unfortunately, a bit of a mix there. Any other pair that you would like to take a look at? Otherwise, don't forget that tonight, if you have time, please join us. For a webinar on, if I remember correctly, trend lines. Yeah, trend lines. So hope to see you then. It's at 4 p.m. GMT, 5 p.m. UK time, 6 p.m. Central European time. Okay, that's good, Kaylee. I would like you to preferably not confused at all, but at least some less is good, of course. Yeah, it's sometimes annoying, of course, if price goes against one's position so much. And that could just be confusing why price did that. But the thing is, don't forget that price can do anything at any point, really. And when we have a bias, when we make an analysis and do it, basically, it doesn't mean the market has to follow that. It's all about really following our plan and setting up our plan, our trade plan, following our trade plan, excuse me, and setting up the trade. And after that, you want to kind of like rule out any emotions, because at that point, really anything can happen. It could do something like this, unfortunately. And it's maybe one thing you can think of maybe is just to think of arguments, and I don't know exactly what your trading plan is, obviously, but think about stuff that is in favor of your trade, and think of things that are not so supportive of your trade. Write it down, and then afterwards think about, how do I say it? Think about, beforehand, actually, think about how you will react if price goes against it. Imagine it already. Imagine the trade going against you. It could already take a bit of the emotions away. It could already prepare you for, like psychologically, maybe for the fact that it can go against you. Maybe the confusion is partly because of this. I don't know. I'm trying to just guess, basically. But in general, price likes to float, likes to bounce up and down, make corrections. So the chances of us having to live through some retracement, to live through some unpleasant price action is quite high. So, but these are general observations. I mean, general things. I don't know. It could be something else that is. I don't know the details, of course, obviously. So, but it is a strong downside, and it did retrace a lot deeper and strong and faster than one would expect. It was a big weekly candle. That's for sure. I mean, it's one of the strongest weekly candles to the downside we've had since a pretty long time. Here, all the way here, 31 weeks ago. But all these dips so far did get bought. So hopefully this one too. That's the only thing really one could how do you say it? One could see potential of the current spot it is in. It's not an easy spot though, definitely. But at this point, to maybe make things easier, is that there's nothing really that can be done at this point anyhow. If that's also sometimes things that we just have to live through, unfortunately. Taking it out here doesn't make sense because it would be too much of a loss, and the stop loss is anyhow below the bottom. The only thing we could do here is try to exit at break even or at a smaller loss. When price retraces, for instance, that could be indeed something to keep an eye on. I think it's the only thing really that can be done at the moment. Well, that was me blabbing about living through a trade that unfortunately is not going our way. So I hope it does turn around, Kevin. And we'll see, we can take a look again on Tuesday about this trade and continue our discussion here. We'll be back though, first of all, tonight, as I said, and then next week, Monday, the fixed schedule starts again with Nene on Monday evening. So hope to see you during one of these webinars. Wish you all good trading, a good day. Hope that something interesting happens. At the moment, I only like the euro dollar probably at the moment. Nothing really fantastic at this point. All right, so that's it for today. Thanks again, and see you all soon. Cheers. Yes, overall, well, yeah, we're bullish indeed on the euro mostly, indeed. Depending on the pair, though, euro odd is quite choppy, so it is moving up, though, but euro New Zealand is very choppy, for instance, so it depends. Your pound is moving up, indeed. Overall, yes, though, correct. Your dollar seems to be one of the better ones, though, probably, but cheers, folks.